Hey, Mike here. I want to talk about a topic I get lots of questions about all the time. This is an email I just got 2 days ago. Always nice to get your newsletters. Wonder if in a future letter you might address some of the questions that I'm sure all of we retail traders have about high-frequency computer-generated trades. I can think of a few, and here they are. Who's profiting from these trades? A price must be paid to access this software. So who can afford it and who's profiting? How does it impact conventional trading systems? How can we profit from this? How can we compete? Will these any chance we can see these computers banned? Do these computers consistently generate gains and never losses? Well, anyway, as you probably know, a high proportion of the trades on the stock exchanges all over the world come from what are called computer programs. And something like a couple years ago in 2006 and 7, like 70% of the trades in the New York Stock Exchange were computer generated. And I think that number dropped last year down to like 55-60%. But what you need to know is there's two ways this happens. First of all, these trades are almost all coming from Wall Street institutions, mutual funds, hedge funds, huge money managers. And these trades have one of two purposes. The first purpose really shouldn't concern you at all, and that's to fill a large order. Okay, if you're a mutual fund and you're trying to buy, say, 1 million shares of something, a huge block of stock, even 100,000 shares of a $5 stock is $5 million. If you got like 100 million, a billion, huge amounts of money under management, you can't just put that order out there to fill this giant order and get a good price for it, because day traders are going to see it, other institutional traders are going to see it, and they're going to know, oh, this guy wants to buy a lot of stock, so I'm going to jump ahead of him, and he's going to drive the price up. So what they do is they use a computer program to just buy small amounts of shares and try to hide what they're trying to do, which is buy a whole bunch. And you can actually do this yourself. There's brokerages where you can put in orders like that. Interactive Brokers, I know, is one. Most, that does this. But you can put an order in to buy like 10,000 shares of something, a penny stock, say, and have it go through a computer program where it just puts a small amount on the bid, so you're not showing everything you want to do. That's a program trade. You can do one yourself. So in that sense, they're real common. Now, what you're really asking about, what you're really concerned about, though, are what are called high-frequency trades. These are computer programs that are doing really short-term trading to try to do that to profit from the stock market. They got a computer program that's watching all the trades go through, and it's making trades, rapidly to try to profit from really short-term gyrations in the market, gyrations that can last for minutes or even seconds. And, there's a lot of evidence to suggest that such programs had something to do with the so-called flash crash that happened a couple years ago. And what is happening is that who is doing that? Who's running these kind of programs? Can you compete with them? Don't try to compete with them. I'll explain why in a second. But it's mostly hedge funds doing this. And there's a few hedge funds, over the past 15, 20 years that have made a lot of money doing that. And they've gotten a lot of attention. They've attracted a lot of Wall Street money. And so one of them's like, there's a small number, like 3 or 4, that have like over $1 billion in assets. And they've gotten a lot of attention. And what's happened is that other hedge funds have opened up and tried to develop similar systems. Some of them have been successful, some of them haven't. But as a whole, they don't really beat the market. They're more of a marketing trick to try to get people to invest their money with them. And, for people, it sounds attractive. Here's a computer program sometimes built by some of the top mathematicians in the world, surely, it can beat the market. Surely it can do a good job. And that attracts money. That attracts attention. But the honest to God truth, though, is that as a whole, they don't do any better than an individual does. You can see that last year, hedge funds as a whole underperformed the stock market. They didn't do any better than the average individual investor. And a lot of the reason why is because these hedge funds are getting more and more attracted to these computer systems, because that's what a lot of people want. And frankly, in the United States, where the market is in a mature bull market, isn't going up 20% a year anymore, it's more of in a range, that becomes even more attractive to people. And if you've got a good computer program like that, theoretically, that's a good way to beat the market and make money, especially when the market as a whole isn't doing that much. So that's what's going on. I wouldn't worry about these computer trading systems, because in markets that are having a powerful bull market, they generally don't do that well. And really, as an individual investor, that's the easiest way to make money. It sounds so attractive to try to make money fast, or try to make a so-called income in the stock market in the sense of regular profits that you can bank on every week. But that's tough to do. And there's a lot of people that are offering to sell you trading systems that do that, and it's a scam for the most part. And it's a lot easier to get rich slowly in the stock market than get rich quick. It's a lot easier to buy into a bull market that's just starting out and try to hold and make a big return than it is to make 100 trades in a row that make small profits that are going to add up to something. The idea of a weekly income in the stock market is pretty much a myth. I don't know anyone that does that. Not a single person. Now, there's a lot of people selling products like that, and I refuse to do that. I get emails every month from someone that'll say, hey, I've got an email list of tens of thousands of people on it. I sell a Forex income product. If you promote this to your email list, I will help promote you. And I refuse to, I mostly just delete those emails, but I think it's a scam. But what you need to know is there's a whole industry built upon selling people stuff like this. And I always wonder, if it's for real, why don't they show us their real results? Why don't they show us their real portfolio? Why are they even selling this crap? Now you can go on my website, you can go to the top, nav bar at the top, you can click the portfolio, you can see my real positions. You can see my real results. Why don't these people do that? What they tend to do is show you a back-tested system with theoretical results. If you read their disclaimers, you'll see they almost always say it's all theory. It's all hypothetical. I don't want to deal in hypotheticals. I want to make real money, And let me show you, if you go to Google, hit images, and type trading robot, these are the images that will come up. These are images off of websites selling what I believe are pure scams. A Megadroid, right? A day trading robot, automatic stock trading robot, on and on and on. FAP Turbo, Pips ultimate day trading robot. Here's a guy, $500 profit, selling a Forex trading robot. It goes on and on. A master scalper, smart technology, Forex trading robot, Forex unlimited wealth, on and on and on. And here's a guy, ultimate money. I don't know these people. If you just type it in, you'll see these are the things that will come up. LMT Forex Formula, Forex Ultrabot, Forex Megadroid, Forex Morning Trade. And what they're promising people is income. They're not promising, they're not telling you to invest in the market. They're telling you you can use the Forex markets, you can use the currency markets, you can use the stock market, and just buy their robot and don't invest, just make an income, and you can live off that. Well, that's pie in the sky stuff. And what you're trying to do if you purchase a system like this is compete with those hedge funds that have the high-frequency trading programs developed by mathematicians, in which probably most of those don't even work. I would say it's probably 50-50. And the truth is, any system like that that's developed that does work, it's only going to work for a limited amount of time because markets change. We're in a bull market, but eventually we're going to be in a bear market. What happens to the system then? Or are you in a bull market that starts out like in Europe, which I think will happen in commodities, and then that market environment changes to a more mature bull market like we're seeing now in the United States? It's a market environment that's different. So trends change. You've got to adapt to trends. These robots, don't. And type Forex income and see what comes up. Here, what's this? Pete Stewart's Forex income. I don't know this guy. It's just what comes up. Forex income domination. Forex income something. Top secret. Secret Forex income. Forex income engine. Why build a successful Forex business? I'm not talking about building a business. I'm talking about investing, On and on and on. I mean, it's just this stuff, though, is just proliferated all over the internet. So, anyway, I kind of went on a rant on it, and let's go back to your question. Won't there be a fundamental depletion of money as these computer trades consistently absorb money from the markets? No, because, like I said, a lot of the computer trades are just regular mutual funds that are just buying and selling stocks, not trying to trade in and out, but that's just how they're building their positions or liquidating their positions because they don't want to do it all at once. So I don't think it's something you should really spend much time even thinking about. I think the important thing to think about is the big trends in the market and how to profit from them. And in my view, that's new bull markets in Europe in sectors that haven't started bull markets yet, but deserve careful watching and careful studying now because I believe they have the potential to do so before this year's over. And I think commodities, the commodities complex is the place to look for that and then look for individual sectors inside of there. So anyway, that's my rant for today. And thanks for the question, and be talking to you later.